Over the last couple of weeks, many of us have been taking stock of the first half of the year. For instance, the NSE gained 25%, but fixed deposits and treasury bills fell, leading us to ask, did we earn enough? Did we spend in an optimal manner? Did we save enough? How did our investments perform? These questions can give us sleepless nights. Mint is your essential guide to navigating these turbulent waters. We simplify the complex issues so you can apply practical solutions on how to earn, spend, save, and invest. Join us as we turn uncertainty into clarity. This is Mint. My name is Lydia Nyawira.
Earn it, spend it, save, invest. Earn it, spend it, save, invest. Mola, kila siku niko chesa mola, make more bila stress. Mola, kila siku waste mola, make more bila stress.
Today on Mint, unit trusts, where the money goes. On Money Moves, we find out how unit trusts generate income. How to build an emergency fund. How easy is it to start an emergency fund? Find out more on Mula Hacks. Jobs of the future. Which skills will earn you more in the next 5 years?
Earn it, spend it, save, invest.
Last week, we broke down what unit trusts are. In today's Money Moves segment, we look at what happens behind the scenes after you put your money in a unit trust. What next? Who decides what to invest in? What are the risks? How will your money generate an income? We'll answer all these questions and more in this episode of our unit trust series titled Where the Money Goes.
Now that we understand what a unit trust is and the types of trusts that one can invest in, one will be curious to find out how the money will make a good return. When putting money into an investment scheme, the most common question for any investor is, where does the money go and how will it generate a positive return?
So when you deposit in any unit trust, or rather if you invest in any unit trust, the money first goes to the custodian. So the custodian, this is the person who holds your money, awaiting instruction from the fund manager or the asset manager on where to invest.
A custodian is a company, usually a bank, approved by the Capital Markets Authority to safeguard the unit trust's funds. After the money goes to the custodian, the next destination for your money will depend on the type of unit trusts you choose to invest in. For example, treasury bills, fixed deposits, shares, among others.
In the case for money market, this is treasury bills and fixed deposits. So when we as the fund manager or a fund manager invest in the treasury bills, they earn an interest. Once the interest is paid to us, we distribute to the clients on a monthly basis.
Treasury bills are a secure, short-term investment that fund managers invest your money in, and depending on the treasury bill issued by the government, it can mature by either 91, 182, or 364 days. The interest rate the money market fund earns will therefore depend on the treasury bill interest rates. For fixed deposits, the fund manager puts a lump sum of money in a bank account for a certain period of time at a specified interest rate.
So we approach a bank and tell them we have X amount of money and would want to fix a deposit with you. Say 3 months, 6 months, 12 months. Which rate are you going to give us at the end of the period? They would come and tell us 10%, 12%. And from that, after the maturity of the fixed deposit, they give us the interest plus the principal, which we distribute to clients.
For equity fund, the money invested in shares can earn via dividends or capital gains.
It's at the discretion of the fund manager to pick the shares which offer the best returns based on the fund manager's research. So dividends, you've given us the money, or rather you've invested in the equity fund. You bought shares, say your Safaricom, your NCB on the Nairobi Securities Exchange. These companies pay out a dividend. Most companies pay out semi-annually, twice in a year. So once they pay out the dividends, they pay the dividends to the fund manager, which we in turn pay out to our clients. So that's one way. I'd also mentioned that for equity fund, it has a daily price. If it was at 100 shillings, you bought it today at 100 shillings, tomorrow it's trading at 1 or 2. Dependent on the price that it will be at that time, you will have made that difference of the price you bought it at and the price you sold it at.
Next, your money will go to a fixed income fund or bond fund, where fund managers invest in corporate and government bonds in the secondary market of the Nairobi Securities Exchange. A corporate bond is a type of debt security issued by a corporation and sold to investors, and the maturity period for this type of bond can be short-term, which is less than 3 years, medium-term, which is 4 to 10 years, or long-term, which is more than 10 years. On the other hand, treasury bonds are units of government debt that offer investors interest payments every 6 months throughout the bond's maturity. They are offered for a set number of years, ranging from 1 to 30.
Going on to the bond fund, you also earn monies twofold. This is you earn one via an interest, because bonds usually pay out interest semi-annually. Once they pay the fund manager the interest for that period, say for that half year, you distribute it to the clients. And also you find that for the bond fund, it also has a daily unit price. Upon selling the unit of the bond fund, you can make a profit based on that difference of price.
Finally, your money will go to a balanced fund, which is a combination of 2 asset classes. A fund manager can invest in either bonds and shares, while in another, they can invest in treasury bills and shares.
Going on to the balance fund, it's the best of both worlds. It gives you an interest payment on one end. On this other end, it also gives you the scope for capital gains, because when we say capital gains, the share values fluctuate quite a lot. In a short period of time, you find that even within a week, you might find a share might have appreciated by more than 5 shillings. And this gives you a good room for capital gains, in the sense that if at the beginning of the week the share was at 50 shillings, at the end of the week it's at 55, it's very easy to realize that difference in the form of capital gains.
To realize the highest gains, most fund managers have a research team. The team analyzes the market conditions before investing in any asset to ensure that it is the right time to buy.
They do this to advise the portfolio managers on the best course of action, to ensure that the fund value, when I say fund value, this would be the fund value of the bond fund, the money market fund, the equity fund, to make sure that the fund value is growing. So yes, we do monitor, and we have a dedicated team that actually looks into that to be able to inform the decisions of the portfolio managers.
Now that we know where your money goes, in the next video, we will find out what can affect your earnings depending on the unit trust you invest in.
Earn it, spend it, save, invest.
On Mula Hacks, we examine how emergency funds can come through for us when we need to cover urgent medical bills or everyday expenses after losing a job. Emergency funds can help us avoid taking on unexpected debt or financing unforeseen costs.
In Kenya, life can change in a moment. A job loss, a hospital bill, a car breaking down in the middle of the road. But what if money wasn't the first problem to solve? What if it was already part of the solution?
First of all, we need to define what an emergency is. So in the world of finance, it's something that comes up and it has financial obligations.
This could range from your car breaking down, a loved one falling sick and you don't have insurance, the rent is due and your paycheck hasn't cleared, the fridge stops working, or your business partner suddenly pulls out. If that isn't all, sometimes the shock is bigger. You lose your job and the world comes to a standstill. It is then that you realize you were never taught to prepare for the worst.
Traditionally, there's a generation that grew up with jobs guaranteed. Like you'd literally go to work and the next time you're leaving, you're 65. That's not the case. Let's be honest, right? At the peak of COVID, we saw it. And also even some government parastatals like Kenya Railway and Telkom Kenya, when they laid off people, it was a shock. We never believed such a thing could happen. So all those things that can come up from nowhere, you have no control over them, but they have financial obligations.
Emergencies don't wait, but with the right preparation, they don't have to derail your life. Having a fund set aside gives you peace of mind by turning a crisis into a mere inconvenience.
When you look at personal finance and the wealth pyramid, it's always important to understand that emergency fund is the foundation, both from protecting you from the unfortunate situations that might come up, but also giving you the abundance mindset to know that if anything happens, at least I can afford to pay rent for 2 or 3 months. Because of that, let me get into long-term investments like real estate and set it up. I always say this, you can start with 1 month worth of your expenses in a bank account, then the rest you can put in a money market account. Because in Kenya here, unit trust or money market accounts, you can get your money if you need it within 2 to 4 working days. 1 month worth of your salary can be in a bank account, then the rest put in a money market account where it will also be earning interest for you as it grows over time. And start with 3 to 6 months worth of your monthly expenses.
Beyond survival, it matters to have emergency funds as they are not just financial cushions. They are growth tools that enhance stability.
And always encourage people to do what I call aging your money. So aging your money is to make your money old. So like, can you afford to pay this month's rent with the money that you are paid in March if you are salaried? That helps you to know that over time, extend the emergency fund beyond 6 months to 10 months, 12 months. There's no harm since it is still earning some interest for you. It's very, very important that we look at the realities of life. Then now we change even the way we are doing things.
The next emergency isn't a question of if, but when. That's why it's important to have an emergency fund you can rely on without stressing about how you'll survive. Now, let's take a quick break. From science to sweets, we travel through a microbiologist's journey to stunning cake designs.
Earn it, spend it, save, invest. Moolah, kila siku waste that moolah, make more bila stress.
Welcome back to Mint, where we explore the world of personal finance, making it simple and relatable for you. Whether you're looking to earn, spend, save or invest, we've got you covered.
Earn it, spend it, save, invest.
The world of work is evolving rapidly. AI is transforming how we work, and trends like remote working, climate change, and other factors are reshaping job roles and essential skills. With all this in mind, what will the future of work look like in the next 5 years? The world of work is changing fast, with technology the major factor in rewriting the rules of the employment landscape. With every innovation, new opportunities emerge. According to the World Economic Forum's Future of Jobs Report 2025, 39% of workers' skill sets will be transformed or outdated between 2025 and 2030. What does this mean? Training, upskilling, and reskilling as employers increasingly prioritize a blend of technical skills such as AI and big data, and human-centric skills such as creative thinking, resilience, and agility. So which job titles or roles will be the stars of the job market in the future? We turned to Shiko Monuku, a trainer and educator with 8 years of experience who teaches young professionals how to prepare for the workplace.
Given the evolution we're seeing, technologically, AI becoming a very big deal over the last 3 years or so, somebody who is AI literate, so data scientists, these are jobs that are going to be very, very relevant, especially people who can handle big data. People who are specialists as far as machine learning, that is still going to be very, very important. Fintech engineers, those jobs, critical, And then, of course, cybersecurity. specialists. This is going to be very important. The more connected we are, the more we advance technologically. As you're seeing this, the positive side growing, of course the negative side also catches up at some point. So people who can help us protect our data and protect our systems, those are going to be very, very critical.
According to a survey published in the World Economic Forum's Future of Jobs Report 2025, software and application developers, security management specialists, and environmental engineers are expected to be among the fastest growing jobs between 2025 and 2030. When Microsoft set up their product development hub in Nairobi in 2022, it hired software developers from telecommunication and technology companies, sparking a war for talent. To secure the developing roles in the tech space, employers seek a combination of technical and soft skills.
One is digital literacy. This is very, very important. Technology is consistently changing, so ability to adapt to technology, new technologies, and be literate in them is going to be very, very important, especially applying them for work. Another skill is critical thinking and problem solving. With all the things that are happening in the world today, somebody who is able to be a critical thinker, provide solutions, that is going to be top. Emotional intelligence is another one that we cannot overstate the importance for. It's still important now, and I think will still be important in the next 5 years.
Some of the key drivers of transformation in the global labor market that are reshaping jobs and required skills include technological change, the green transition, societal and demographic shifts, and economic trends. The World Economic Forum predicts that 170 million jobs will be created by the end of the decade. However, 92 million jobs will be lost, resulting in a net growth of 78 million jobs. Again, due to the broadening of digital access and the advancement of AI and information processing technologies, clerical and secretarial workers, as well as cashiers and ticket clerks, are among the job categories expected to decline the fastest. The future of work is not coming, it is here. Shiko says the key is to stay adaptable.
Even traditional careers are having to adapt. I'm an educator, and we're having to employ blended learning, where we're using technology even in the classroom and away from the classroom to be able to do what we've been doing traditionally, and now picking up new ways of doing it. Doctors now are using technology to actually do surgery, and it's helping them.
The jobs of the future are not just about technology. They're about people who can grow with it.
I think the ability to learn and relearn is critical. That curiosity, that is something that is really going to be needed by all of us if we are to survive this particular artificial intelligence revolution happening right now. Because we have to learn new things.
Earn it, spend it, save, invest.
In our Coins to Capital segment, we introduced Alice Wairimo, a trained microbiologist who traded petri dishes for pastries and sweet experiments. Let's take a look at how Alice scraped the few coins she saved up during her internship as a microbiologist to start her cake business.
In life, they say, what is meant for you will always find you. For Alice Wairimo, her baking career sort of found her. That's after she graduated with a degree in microbiology and thought she would spend her whole life in laboratories.
I graduated in 2018 and I did an internship. That's between 2019 to 2020, just before, rather COVID is what got me back home when everything shut down. So I did have that experience of working in a lab, and different labs actually, but I wouldn't say it's something that I found fulfilling.
With a free time on her hands and a few coins that she had saved up from her internship, Alice signed up for baking lessons.
Luckily, there was a lady, she also bakes from home. Oh, well, at that time she was also baking from home, and I used to get most of my cakes from her. So that's how I saw that she teaches people how to bake, and I just engaged her. She asked me, would I want to learn as a business, to do it as a business, or do I just want to learn how to bake so I can bake for my friends or my family? And I told her, you know what, I don't mind getting to learn how to do it as a business, because where I'm at, I don't have anything I'm doing, and I don't mind having a new stream of income.
Before she took up the baking classes, Alice had previously tried baking and it worked out well. Going for the classes to refine her skills affirmed to her that this was the right path.
Still during COVID period, it was my husband. At the time, he was my boyfriend. We had actually just started dating, barely a year in. And it was his birthday, and I wanted to do something for him, but I was on a tight budget. So I said, let me bake the cake myself. I just went to the supermarket and bought like cake mix, got frosting, got a cake, mixed it, decorated in my own way, and it came out really nice. And it was well received where I took it. So that's what got me thinking that maybe I can do this.
The cake business is a common venture, but Ali says one just needs to find their niche to thrive when they enter this already saturated market.
Everybody and their sister is baking nowadays, but I still feel there's space for everybody. There's space for new bakers in the market. Everyone has their own niche, that's what I would say. Finding your niche helps keep you in the game or helps you stay in the game for longer. Another thing I would say is knowing what you're good at, because there's so many aspects of cakes and cake decorations. Some people are just really good at baking and you can just take that and run with it. But then again, there's the artistic aspect of it, which is what I fell in love with. And which is also not very common, if I can say that, because anybody can learn how to bake a cake, anybody can learn how to decorate a cake, but then art is very difficult to be taught. It has to be in you. You have to be creative in your thinking for you to imagine it and now want to bring it to life.
Alice's transition from microbiology to cake artistry offers valuable lessons on entrepreneurship. It exemplifies how a side gig can develop into a main venture, demonstrating that starting small and growing organically as she did is entirely possible. Thank you for joining us on this episode of Mint. Remember to be smart with your money and stay tuned for more tips on earning, spending, saving, and investing. Until next time, keep your finances in check. Discover more on Mint via mula.co.ke or tv47.digital.